Hello and welcome everyone to another weekly market commentary from StashAway. With us, of course, our Chief Investment Officer, Freddy Lim. Freddy, how are you?
Hi everyone. How's things? Lots of developments.
Yes, lots of developments, and we got so many questions, which is super exciting. So we can get that conversation with you, the listeners, going. So we got a lot of questions on our YouTube page. Just for the people who don't know, we also now launched our weekly market commentary as a podcast. So you can find that in any channel that you usually listen to your podcast, like Apple Podcasts, Spotify, or wherever else. So check us out there if you're on your way to work or you're driving or whatever. You can join our listen to our podcast instead of watching us on YouTube, and you can still send us questions there as well. Freddie, before we get into the questions, there's a couple of things obviously that have been developing this week. I think that it's becoming more and more clear that Joe Biden is now going to be officially the president as well, right? A lot of the states are certifying the votes, and with that being said, Congress and the Senate is slowly starting to work on a package again, because obviously, coronavirus is ravaging in the US currently, right? A lot of states are in shutdown. And I think it's now, more pressure on the politicians to come to the table and actually get something done. There was something this week. Do you want to give a quick overview of what's happening there?
Yeah, I guess this is fresh off last night, and the leaders of the two chambers of Congress, so Nancy Pelosi for the Democrats-led House and Mitch McConnell for the Republican Senate, they have come together to actually jointly propose a new $900 billion package. The package includes about $333 billion for the sort of reliefs that to the normal reliefs and spending that we were talking about. But the plan is still very early, but it's still missing details on state and local aids. Particularly previously the sticking point was on the paycheck program and how much more unemployment reliefs would be extended. In this proposal, it's a little short here. It's about a month. I don't know what that means. It's like a month of extension of unemployment relief, phased out over 2 months. It sounds like it's 1 to 3 months. That's sort of a very, very short time for that program to expire amid the pandemic. So I would say this might be the sticking point that comes out in the congressional debate, but it's good to see the leaders of two chambers of Congress proposed it.
Yeah, exactly. I think at least there's something coming more bipartisan than before, right? So let's see where this goes. We obviously will be following up on that with you guys over the next few weeks and see where that lands. But we did get a couple of questions ready. Let's get through them now. The first is actually from Brian Chia. He say, hi StashAway, do you guys have any clean energy / alternative energy ETFs on your watch list to include into our portfolios during perhaps the next reoptimization?
It's a really good question. Actually, it's going to spur some thoughts over here as well. We do have clean energy ETF in a different portfolio. It's a very localized portfolio in Malaysia. As a test case, and we have been monitoring the space for a while. And in fact, not just clean energy, we are also monitoring a lot of other new up-and-coming ETFs. And if we don't include them today, it's probably because they are new, and over time their liquidity profile becomes more mature, and they may come onto our list. So do stay tuned for that. But this is a great suggestion. Thank you for that.
No, absolutely. The next one is from V88LA. He's saying, thanks, Freddy and Philipp, for the updates. I've been reading about stacked ETFs recently, whereby one can actually double or triple their upside exposure while capping the downside exposure to a single benchmark in exchange for a slightly higher expense ratio, at least my understanding. Would love to have your thoughts on these investment vehicles.
I think a good example for a stacked ETF or the leverage ETFs is the 3 times leverage QQQ. So the TQQQ, triple QQQ, that ETF particularly leverages 3 times to track what QQQ itself is tracking. And however, if you look at this year's track record, the actual return when there's an upside is not even 3 times. It's actually slightly more than 2 times. And a big reason for that is that there's cost in leveraging. And two, there's also the asymmetric math of a pandemic. When you have a big systematic meltdown or drawdown in the market like this year early on, when you go from $100 to 50, it takes double the amount of effort to go back to 100. So the math is actually not asymmetric, or is asymmetrically against you. So here comes the last point. I'm a bit puzzled about the statement on the downside limited to QQQ is actually not true. When you are leveraged, the downside is also multiple times due to the leverage. As far as we checked, the volatility of TQQQ is multiple times that of QQQ in this case. If there's some other cases, please do write in and let us know. We will examine it. But my understanding is leverage works on both the returns and the risk side. And a lot of times on the return side, the cost of leverage actually does not produce exactly 3x in this case, or the asymmetric math of a drawdown in a year like 2020 actually makes you see less upside than a normal year. So do think about those things before investing in it.
I guess great answer and great question as well. So yeah, but if you do have any other product that you were looking at that we didn't cover now, just Sean, let us know. Happy to have a look at that over the next few weeks. The next question, Freddy, is from Wei King To. He says, once again, want to appreciate my thanks for the commentary, which provides a glimpse into how you think about markets and investments. Very helpful. I have two questions that could be somewhat related. One, what is your outlook on the energy industry? Two, how would oil prices affect markets, other asset classes?
Well, energy is undergoing some demand shock due to the pandemic earlier this year, and hasn't really fully recovered because airlines hasn't recovered, for example. So the derivative of the buying actually has not returned, and the vaccine news, positive as they are, do take quite a bit of time to work itself out in terms of mass production and global distribution. In our base case scenario, which is quite optimistic, is 2022. It could be 2023 where most people in the world get vaccinated. So it's a little early for energy itself, but energy has taken a different trick in this recent years. Lots of pressure on the ESG front, and also with Biden's presidency, a lot more effort to tweak things towards clean energy. So it is quite kind of intertwined. When you say energy now, I start thinking about clean energy, or I start thinking about traditional energies. But I think the traditional bit will take some more time to see demand revived.
Great. And final question, Freddy, from Simpson Toe. He's saying, thanks again for the video. Is StashAway aware of the delisting threat of China stocks such as Alibaba or JD? And what is StashAway's view on this threat, and what will happen if they do delist Chinese companies?
Well, the threat is always there, but it's not as speedy as what the media headlines says. When you go beyond the headlines and start reading the details, there's a certain process before that happens. So first, the US is now I think encouraging companies listed in the US to submit a declaration form that they're not under foreign government controls. But by signing that form, the company also authorizes or allows the US government agencies to audit them periodically to verify that it's true. And those audits includes, we don't have great details on what kind of audits are going to be there, but I figure cash flow accounting audits are inevitable. And once there's non-compliance for a continuous period of 3 years, then there will be a proposal to delist. So there's a certain due process for that to happen. Let's not get ahead of ourselves.
Oh, excellent. Thank you, everyone, for all these questions. This is great. So keep them coming. If you have any follow-up questions, again, keep them coming. Put them into the show notes and below the show notes. And if you're watching this on YouTube, if you're obviously listening to it on the podcast, you can always write to us at support@stashaway.com. We also have a couple upcoming webinars in Singapore on the 10th of December. We have a very interesting webinar. Actually, it's called Inside the App. So you learn more about StashAway, the company. You can ask a bunch of questions. That's on the 10th of December. Again, sign-up link is in the show notes below. And for Malaysia on the 9th of December, we have a webinar called How to Plan for Your Retirement. So we get your retirement ready. That's from 6 to 7. And again, show notes have the links to both of those for you to sign up. Thank you all very much again for listening this week. And Freddy and myself will be back with you next week. Until then, have a great rest of your week and a great weekend ahead. Bye-bye.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.